Thank you so much for joining us today. I'm really excited to kick off this webinar. This one's on sanctions. So we are going to discover how the long arm of the US law can have devastating impacts on your crypto business. So I always like to start off our webinars talking a little bit about who the Canadian Blockchain Consortium is. So we've been going now since about 2017. And we started off as our Alberta Blockchain Consortium. So mainly we were doing events, but we focus very heavily on education, advocacy, projects, education, making sure that people have a fundamental understanding of what blockchain is, also what it isn't, about different areas of the cryptocurrency space. If you're interested in learning more about us, please join us at canadablockchain.ca. We are really proud of the organization was actually started by this incredible woman. Her name was Suzanne West. She was actually the CEO of an oil and gas company called Imagineer. And she wanted to kind of bridge the gap to see how blockchain technology could actually impact the oil and gas sector and help make energy companies, technology companies first with oil and gas assets versus being oil and gas companies trying to figure out their way around technology. She really believed that blockchain could be a fundamental technology to improve how our energy sector works. Unfortunately, she passed away a few months after starting this incredible idea. And at the Blockchain Consortium, we've been kind of taking it on in terms of helping preserve her legacy, but also grow this community and movement across the country. Of course, we're a not-for-profit organization, so we're really, really grateful to all the incredible members that we have in our group. From McLeod Law and the AML Shop, Royal Bank, etc. And we want to give a big thank you to today's sponsors of the event, which is the AML Shop. I'm so sorry, I don't know why it's going on so quickly. And McLeod Law. So thank you so much for being our sponsors today. Please engage with us if you like anything that we have to say. You can find us on Twitter, Facebook, different ones like that. So I'm going to now introduce our incredible panel. So a little bit about this event that you're going to be seeing today. So with the rapid adoption of cryptocurrencies like Bitcoin and compliances is taking center stage, and many custodians and digital asset platforms are starting to fall short. So in particular, there's a failure to comply with know your client regulations and investment restrictions applied by the United States government, and it can have a pretty massive impact and results in major fines for digital asset companies. So we're going to discover in this really insightful seminar different ways that the laws enforced by the Office of Foreign Asset Control can impact digital currency investment and restrict client jurisdictions, and strategies for keeping aware and compliant. So my name is Clay Carrington. I'm the Executive Director of the Canadian Blockchain Consortium. I'm excited to be your moderator today. First up, I'd like to introduce Matt McGuire. He is an MACC and an FCPA, as well as the practice leader for the AML Shop. So Matt is an internationally recognized expert in anti-money laundering, counter-terrorist financing, and sanctions compliance. He also leads the advisory practice team at the AML Shop. He's been assisting governments and financial services companies to assess and reduce financial crime and related regulatory risks for about 15 years now. Matt is a chartered professional accountant and has been induced as a fellow CPA in Ontario, and is certified as an anti-money laundering specialist and certified cryptocurrency investigator, and accredited as an anti-money laundering professional and certified in financial forensics. You have such an incredible career, Matt. It's amazing.
Just a lot of letters.
I'm like, oh my gosh, you're just so qualified. Matthew has also been qualified as an expert witness in forensic accounting and money laundering, and has testified before Senate committees, parliamentary committees, and the Cullen Commission of Inquiry into Money Laundering. So you definitely have an expert sitting on this panel. Next, I'd like to introduce Matthew Begorian. He is a partner at McLeod Law, and Matthew is the head of cryptocurrency and blockchain group at McLeod Law. His commercial practice encompasses private market financing, mergers and acquisitions, secured and unsecured lending transactions, stock exchange listings, shareholder agreements, unique contract drafting, and that's just to name a few. Matthew also acts as for a variety of businesses and entrepreneurs, mainly in the cryptocurrency and private lending industries. His clients in the cryptocurrency and blockchain space include cryptocurrency exchanges, platforms, issuers of digital currency, including stablecoins, cryptocurrency miners, and cryptocurrency investment funds. Matthew also provides legal advice to a variety of private lenders, including mortgage investment companies, syndicate mortgage entities, and mutual fund trusts. His involvement with the cryptocurrency industry and private lending industries include assisting with incorporation and organization of specialized cryptocurrency related entities and MICs, and assisting with private placement and capital raising activities and secured and unsecured lending transactions. Matt, you also have an incredible bio. And last but not least, Robert Whitaker is the Chief Operations Officer for the Blockchain Intelligence Group. So Robert served in law enforcement for 23 years and now serves as the Chief Operating Officer for BIG. Mr. Whitaker previously served as a supervisory special agent with Homeland Security Investigations, and last served his HSI's illicit finance and proceeds of crime unit, where he oversaw the illicit digital economy program, the IDEP. So the IDEP was responsible for overseeing cryptocurrency investigations, providing training, equipment, and analytical support, and investigative methodologies needed by the HSI special agents engaged in investigations involving cryptocurrencies. The IDEP maintained relationships with private industries and academia involved in the cryptocurrency space worldwide. And Mr. Whitaker previously served as a resident agent in charge of the HSI office in Las Vegas, Cruces, New Mexico, as well as municipal police officer at El Paso, Texas for 8 years. Mr. Whitaker has a Bachelor's of Science in Criminal Justice Administration and is a certified Bitcoin professional. He is also recognized as a cryptocurrency expert witness testimony provider. So I think you have a absolutely stunning group of panelists here today who are going to be having a very fascinating discussion. I hope you guys all find it as informative as I know I will. I'm going to be learning a lot just by listening to you gentlemen today. So I'm going to start off my first question, and Matt, I'm going to pose it to you. So are there sanctions currently being imposed by the Canadian government, and what are they?
Yeah, sure. So, you know, in short, a sanction is just a way to achieve a policy objective. You know, the U.S. and Canada have both autonomously and together with the United Nations saw fit to sanction individuals and different purposes to try to achieve some policy ends. And so Canada has its own sanctions. Some of them mirror the United Nations Act, and some of them are used for things like attacking corruption. And so Canada has them a whole range from, you know, Korea to Iran, and you know, they apply not just to banks, but apply to all persons in Canada and Canadians abroad. And so equally too, they apply to financial services companies and crypto companies. So yeah, we have a wide range of sanctions that apply in Canada. They haven't been enforced as vigorously or as in the US or even much at all, but they exist, and financial services companies, crypto companies should be aware of them.
I just want to add to that. Canada really hasn't yet come out with a definitive authoritative position on sanctions and digital currency. I mean, I think you could argue the language right now with respect to Canadian sanctions, I think Matt would agree, is general enough to catch vast virtual asset service providers and other types of entities. But unlike OFAC in the US, Canada hasn't really come out with like a frequently asked questions page or anything specifically about digital currency.
You're right, and it is super broad. If you look at, you know, if you start to look at the language, it's, you know, North Korea as an example. It prohibits providing financial assistance or benefit to the listed persons or for the prohibited persons. It provides, you know, it prohibits facilitation, intermediation, you know, and you know that it's hard not to argue that crypto is a benefit or a financial services or fits into one of those big broad categories.
Yeah, it's like any person in Canada or any Canadian outside Canada have to comply with these regulations. in Canada.
Yeah, and I think it's also important to know that people are actually, people that are sanctioned around the world are turning to crypto more and more to try to avoid those sanctions, and that includes entire countries like Venezuela and Russia and North Korea. Looking at cryptocurrency. So this is a nascent space that has big opportunities for sanction avoidance.
Yeah, it's like I mentioned this before we went live, but yeah, like generally the our financial institutions and the global financial system is how we monitor and deter money laundering and sanctions compliance. So if we have something like cryptocurrency, which operates outside of the traditional financial system, that is very much a concern to the Canadian government and the US government as well.
Absolutely. Prime example is the North Korean Lazarus group that hacked the South Korean exchanges for millions, if not billions of dollars. So
it's a lot. It's a lot.
That's so interesting. So I'm really curious as a Canadian provider, I'm not in the cryptocurrency space, but say I wanted to sell a product to someone in Russia. And by doing that, how would you determine if they're on the sanctions list or not on the sanctions list? Because it seems like a very big undertaking for a person. Would you need to hire out a law firm or an investigator to go, okay, I'm interested in working with this company specifically and trying to figure out if they have any kind of affiliation? And I know in the crypto space, you'd be probably looking at wallet addresses, they might be using Monero or some type of privacy coin, or maybe they're trying to transact in Bitcoin. So it seems like it would be a very interesting and onerous process almost to try and figure out if they're sanctioned or not, and especially if they're using crypto to do it. How would you guys go about figuring out if that company is sanctioned?
Fantastic question. And I think the first concept we have to kind of dig down into is the idea that, not only is every Canadian and every Canadian outside of Canada subject to the rules, but the laws themselves are strict liability, which I'm sure Matthew will help us explain. But so it doesn't really matter that you do nothing or that you're not aware of the obligations. If you breach the obligations, if you do business, in your case, with the sanctioned Russian, regardless of whether you looked into him or not, if he was on the list and you did business with him, the liability attaches to you. So the next question to ask, the next question that in the U.S. and the Canadian legislation, goes down the road to, is to say, what are your risks? How likely is it that somebody will try to exploit you for the purpose of circumventing a sanction? In the case of crypto, the answer is probably fairly high, and you should be thinking about, all right, what coins do I offer? What tokens do I offer? How wide is the geographic scope of my operations? These sorts of things. So in your case, how do you conduct the due diligence? Well, you take what you know about that individual, and you screen it against the list. In Canada, the lists are very hard to compile and look against. We created a guide at one point to try to simplify it, but there used to be a good consolidation by the office or the Office of the Superintendent of Financial Institutions in Canada. It no longer exists, but there are services you can screen against that pay for you services, and second, you can manually look at the list. So there are only a few lists particular to Russia. If you went global affairs and sanctions in your Google search bar, it'll bring up the list of Canadian sanctions. And similarly in the U.S., they actually have a far better program that on OFAC's website, there's actually a search tool embedded in it. You can actually put in the name of the person that you'd like to search, and they'll do the query there for you to help for that process. Then the next analysis you have to conduct is twofold, really. Is there a likely downstream use of the goods? And second, are the goods themselves, the nature of the goods, subject to a sanction? So could they be used as weapons or such?
Oh, sorry,
Matt. I'm sorry.
I was just going to add just quickly here, Robert, the reason, Cleo, why you'd want to be, as a Canadian, where you'd want to be interested in that, in complying is in Canada is OFAC has a fairly broad reach, in that there is something called U.S. secondary sanctions that may apply. So a Canadian, you don't have to be a U.S. national to be subject to these secondary sanctions. So they target non-U.S. Individuals and entities and financial institutions. And so if you're offside the sanctions requirements in the U.S. as a Canadian, you could be put onto what's called the specially designated national list in the US, which is a list you don't want to be associated with yourself as a Canadian. You could be put on that list. You could have, if you own property in the US, you could have that frozen. You could be prohibited as a Canadian from getting a visa to the US. You could be prohibited from entry into the US. You might be denied certain licenses in the US to run businesses. So the consequences of breaching the U.S. sanctions for Canadians is actually quite severe, and it's something that I think virtual asset service providers maybe aren't aware that those secondary sanctions exist, but they're important to keep in mind.
Right, and I also think that going to that point, that not being aware, it's not going to fly these days. I mean, in 2013, 2014, 2015. It may have been a legitimate excuse to say it's crypto, we're doing transactions back and forth, but we just know of an address and we don't know if it's sanctioned or our tools don't show it. But today, the compliance space and the tools available for cryptocurrency exchanges are vast for those doing business with cryptocurrencies. Any good tool out there is going to show you when an address is sanctioned, or if you're dealing with the person. Obviously there's other tools that tell you if that person is sanctioned, but years ago it might have been okay to say I didn't know there was a sanction in place, but today that's probably not going to fly.
Yeah, I'd love to pick up on that point, and then the point, Matthew, of secondary sanctions and how important the domino effect is, right? The reason why U.S. sanctions are so powerful is that secondary sanctions point, is that normally, the U.S. wouldn't have jurisdiction over a bank in Switzerland, right? But if they see that, what the point of the secondary sanctions is, if that they see the Swiss bank is dealing with somebody that they've sanctioned, they will sanction that Swiss bank. That's the power of what they have, is to say that if you want to clear in U.S. dollars, you must comply no matter where you are in the world or whether you're an American or not. And why I think that the subject here is so timely, is that even if you're a Canadian dealer in virtual currency, if you're found to be doing business with a U.S. sanctioned person, that could sanction you and could result in sanctions to your service providers and have that domino effect that could have a tremendous impact on your reputation and your bottom line.
And your liability, your contractual liability with that other party in Canada. Not only are you added to the specially designated national list in the US, but yeah, you could also be offside certain covenants in agreements that you have with different parties in Canada that you do business with. And that just is part of that domino effect, and that's a huge risk for people.
Oh goodness!
So it's not even. Oh, sorry.
Well, I was just thinking, like, my goodness, it'd be like kind of scary. Like, say if you're a small business and you're trying to sell your product all around the world, and it's like trying to figure out who's sanctioned, who's not, and if you work with someone who is and you didn't know it, how that's going to dramatically impact you. So it seems like it would be a very good idea to work with any one of you gentlemen if you are interested in doing anything that involves business internationally at this point.
Yeah, for sure. Internationally, for sure. Yeah, that's there's a big risk there with certain countries.
So we're really just not talking about a theoretical risk. There are two, a case just this morning where a cryptocurrency provider was issued a penalty following a settlement, and one just a month ago similarly. These are not remote possibilities.
Yeah, there was just a settlement announced today on the case in the US of a virtual asset service provider. And I think, the amount of money that was exchanged in violation of the sanctions rules I don't think it was a lot, but the penalty,
$129,000.
$129,000, but the potential penalty was like in the tens of millions of dollars that could have been the maximum penalty, I think, that could have been levied against the virtual asset service provider for violating those sanctions.
They got off pretty easily, actually. I mean, that's what was the fine? $500,000, Matt, somewhere around there.
$500,000, yeah.
Mm-hmm.
Yeah. So I mean, relatively easy compared to what the fine could have been. And I think what's important is you look at how it was discovered that they were in violation, and it's because of capturing IP addresses. So this is something that most financial institutions are already aware of and fully working on making sure they're in compliance with sanctions through IP addresses and capturing. If you're a virtual asset service provider these days and you're working in crypto, you may say to yourself, well, we're doing crypto transactions back and forth. It's pseudo anonymous and we're doing the best we can. But when your clients are logging into their accounts on your platform, you should be capturing IP addresses and seeing where they come from. It's that simple.
Well, even to follow on that point, Rob, I mean the point is that you're probably as a virtual asset provider, you have to have a whole bunch of controls that are fraud directed anyhow, right? You don't want to lose your money. What these decisions to me are saying is that if you have that information, we're expecting that you're using it for sanctions compliance too.
Yes, excellent point, Matt. Excellent point.
Yeah.
It's not just about AML; it's about sanctions too.
Well, sanctions too. Yeah, the two are kind of similar.
Yes.
I would have a question. So then what are some of the indicators of the jurisdiction of a crypto transaction? Is that like the IP address lets you know kind of the jurisdiction that it's coming from? Like what if they're using a VPN or something?
Well, the first thing you have to realize is cryptocurrency transactions do not come with an IP address attached. It's not part of the network. The network doesn't capture IPs. That's not how crypto works. So you don't necessarily have an IP address to work off of. Now, there's two things out there that allow you to actually be aware of IPs in cryptocurrency transactions. And that is if you have someone log on to your site and they're actually doing the transaction from your site or you're doing it in their behalf, you can capture the IP they use to log on to your site with. The second one is, believe it or not, there is companies out there, and we're one of them, that we do under specific circumstances capture IPs related to cryptocurrency transactions. And it's not gleaned from the transaction, it's gleaned from other information, but we can on certain cases tell you where the transaction originated from. Those are limited though and very rare, but there's only two real ways to get IP information like that, and it's not gleaned out of the transaction for cryptocurrency itself. That's not how it works.
I think it's important too to have the right tools to do the proper analysis, the right analytical tools, because you do have to kind of look pretty deep into these transactions to find the indicators. I think sometimes it's not very obvious in crypto, and I think there's like other warning signs. If a client is using an exchange that's located in one of the sanctioned countries, or even indirectly, if someone is, I read in a recent case, one of the red flags was someone was advertising their brokering services on a peer-to-peer crypto trading site that was accessible in one of the sanctioned countries, and so that was a tip-off. And just different transactions with no logical purpose that kind of touch on exchanges in sanctioned countries. Those are all, from what I understand, red flags. So it's like, I don't know, guys, if there's like one single indicator, or are there kind of multiple things that would be looked at?
Yeah, I mean, OFAC in their settlement today even said it is focused on a risk-based approach. Look at who you're dealing with. Look at whether or not it's an unhosted address. It's a confluence of factors that leads to risk and more measures. I think it's worth bringing up Rob's earlier point about Venezuela and Iran, and this is where most of this intelligence is coming from. I mean, most of the focus on OFAC's advisories and their frequently asked questions is around ransomware and thefts by these jurisdictions: Venezuela, Cuba, Iran, and so they're focused on these because those thefts, those ransomware payments are funding the sorts of things that the U.S. has policies against, right? And they've gone so far as to say that any transactions in the Venezuela stablecoin, the oil coin, or I've forgotten what it's called. But
Petro.
Oh, Petro.
Petro.
Thanks. Thank you.
Petro coin.
Easy enough for you to remember. But you know, the point is that they banned the dealing with that currency altogether. And so this is why there's this hefty focus. It seems like modest amounts, right? Like they moved, in the case of the one settlement today, it was $129,000. In the case of the one that was, you know, just about a month ago, it was only what, $9,000 worth of transactions over 3 or 4 years. But they're so focused on sending a message that these payments for ransomware, for theft in crypto are critical to their ability to maintain their policies.
Yes. All right. I'm learning so much here. I have so many questions. So many. So what exactly would be the link between like the travel rule and sanctions in Canada? Because you're talking about like Venezuela and Iran and things like that, and doing transactions in the Petro. Does that have anything to do, like, does that impact the travel rule at all?
The travel just generally, VASP have to obtain certain customer info to be sent with the transmission of funds, generally to comply with the travel rule. I know you guys are well versed in the travel rule. And I think it could be a tool for the government to enable them to freeze transactions that are related to sanctions violations. But there could be another link between the travel rule and sanctions.
I mean, the travel rule is going to absolutely establish where transactions are occurring from and to, since two VASP has to exchange information about who their customer was that made the transfer from one point to another. Now, there is also the wanting of the rule to cover non-custodial wallets or non-hosted wallets, say, for instance, between me and Matt. We're still going to, the VASP is still going to have to know the counterparty risk there. So they're still going to have to look into who their customers doing business with in that non-hosted wallet, and then go into the hosted wallet. So the travel rule is going to do a lot to distinguish where transactions are originating and ending up at. And that is essentially the enforcement arm of the sanctions rules. It's like, we can enforce it because we know where it came from, where it went to, versus we don't know where it came from, we don't know where it went to. Two different thoughts there. But yeah, the travel rule, it's contested. A lot of people don't want to see it implemented, but it would certainly help in this case.
Interesting. So I'm really going to apologize if this is like a silly question, because I am not as intelligent on this topic as you guys. But so if I wanted to send money to somebody out in like Venezuela to buy something, and I had an unhosted wallet, just hosted on like a cold card or a ledger or something, and I send that transaction and it's to like a sanctioned someone with sanctions, how exactly would someone go about figuring out that I had done that? Like if I wasn't logged on to an exchange or something like that can actually track my IP address, like how does a travel rule stop like just a general person with an unhosted wallet to get around this?
Well, I think you've nailed you've nailed the point down with crypto. At the end of the day, crypto is still crypto, and to be able to distinguish that you personally at an unhosted wallet sent funds to a sanctioned address. Now that sanctioned address is likely monitored somewhere and it would be seen, but tracing it back to you is a different story. It could be very difficult. But if you as a person has ever gone to an exchange and used that address or that wallet, so you have an address, which is a single account, if, for instance, but you have a wallet, which is a group of accounts that you used. If any one of those addresses within that wallet have then reached out to an exchange, there's going to be exposure there of them finding out who you are, essentially. There is ways, and that's more investigations around cryptocurrencies and how investigative activity works. Is it possible? Certainly it's possible we could de-anonymize you eventually. But if you do it correctly, which, there's very bad actors that do very good work in that space, that they could essentially still remain anonymous and do transactions with sanctioned countries.
Yeah, because I was just I was looking at, they have a cold card and it connects to like a Wasabi wallet, and you can generate like 1 million addresses if you want to out of a Wasabi wallet and never use the same address twice.
Well, that is the key concept of being anonymous on the blockchain, is never use the same address twice. Most people will mess that up eventually and use the same address twice.
People sacrifice privacy for convenience, and
yes, all the time
in crypto. So they'll just use this. I've done it. You know,
yeah, I do it all the time.
Same address. I don't change addresses each time I make a transaction. It's why, right? But yeah.
Well, last time I checked, you weren't sanctioned, Matthew, but I haven't.
No, I hope. Maybe in the last half an hour, that's changed here.
You better check again.
Yeah, exactly. Yeah. I'll be calling one of you guys to help me with the audit.
There's some things that keep coming up in this space. Like I was reading, they have this new one like Coinjoin. So if someone's sending like an exchange is going to send out a transaction, and you keep generating like a new wallet address, you can say, okay, I want like $10,000 worth off of this exchange, but they batch it with a Coinjoin. And it's like, it can just, now, how do you even trace it? Because it's gone out to like 100 different addresses, or it's scrambled it somehow. I'm not technical enough to understand that one, but I was like, there's this, they keep coming up with new technologies to make it harder and harder and harder to distinguish who could possibly be doing what.
Well, that is kind of the impasse we're at with crypto in general. So we're at the impasse where we see technology countering regulation. So regulation comes in, technology counters, regulation comes in, technology counters. We have to come to an agreement somewhere that these are the rules, and we're going to play by the rules. But you're right. If you remove funds from an exchange and immediately run it through a Coinjoin or multiple Coinjoins, and you come out on the other end, tracing you through that Coinjoin is nearly impossible. I was reading online that a person was able to do about 20% de-anonymization, but that gets lower and lower with every Coinjoin that transaction is done in. And certainly anytime you swap addresses, it becomes even more impossible to go through Coinjoin. So Wasabi wallet and Coinjoin is kind of a dangerous thing for regulation and sanctions. It allows a lot of avoidance.
Well, I suppose that's the first step, right? If you were setting regulation, the first thing you do is say, I'm going to go after the intermediaries, right? So I'm going to try to, police first the folks that are doing things that were, essentially regulated anyhow, and subject to oversight, and then put some controls there so that we have some investigative trail. And then the natural progression seems to be what's being done next is, how do you regulate the use of unhosted wallets? And then it keeps building out from there, it seems.
Yeah. So picture Bank of America saying one day that we're gonna launder everyone's money, and we're gonna run it through this multiple laundry of money over and over again until no one knows where it came from or where it went. How fast would Bank of America be out of business? But we've allowed, yeah, exactly. We've allowed Coinjoin to be and Wasabi Wallet to be in business for how long now?
But there's a bit of a, the dichotomy is like we in crypto, we care about privacy. There's a subsect of crypto. We really care about, ownership of a good or asset. It's ours. We care about privacy. We might not want the government, seeing that we're making certain purchases of certain things. Maybe that's not so much an issue in North America, but in other countries. And that's one of the, the great innovations of crypto. It's true ownership, and it's you conduct transactions anonymously. And so it's very difficult, I think, to bring everyone in crypto aboard that the train of thought that runs with enforcement, and that we're trying to enforce laws and regulations, and so we need people to identify themselves and provide a basic level of ID and accountability. But I think in crypto, it's that line of thinking is met with resistance, and so we have these products like Wasabi Wallet, Coinjoin, and I don't think they're going to go away. Like I think they're just going to, new companies are going to come in with, like Matt and Robbie previously said, with as new regulations come out, new technologies are going to come out that it's like a cat and mouse game, right?
Right. So look at a site called Tornado Cash. It's a smart contract mixer. That is kind of how technology, comes up again and starts to counter regulation. So it's going to be interesting where it goes, but it's also going to be very difficult if we continue with this cat and mouse game kind of thing.
Yeah, I could imagine. Like, it seems like right now, if anyone had a little hardware USB wallet, unless customs is looking for something like that, or opens your bags. It's like you could take every bit of your net worth into Bitcoin, fly anywhere around the world, and just like live there without having to,
report
money from like Canada to wherever it is that you want to move to. Like,
piece of paper wallet going in and out, USB. I know that at least when you cross into the U.S., they ask about monetary instruments, and going to Canada too. But one thing they don't ask for is about crypto, and crypto is not money, at least for U.S. standards. So you don't have to claim it as money. So you're not carrying a monetary instrument across the border over $10,000. You're carrying your crypto wallet. No one seems to care right now. That may change in the near future, but as of now, as far as I know, it has not. I haven't crossed the border in a while. I've been stuck at home.
Yeah. I went to a conference in New York City, one of the consensus conferences, and I had my laptop, and customs just did not ask about cryptocurrency, and I in fact had quite a substantial amount of crypto, and I'd kind of forgotten that it was in the laptop, essentially in a wallet. But yeah, no one really asks specifically about crypto, and that's right. To Robert's point, it's not money in the U.S., so it's interesting.
Interesting. So back to the sanctions part, I'm curious, what happens if you receive a transaction from a listed digital currency address? Matt, B, would you start that discussion?
Yeah, I can just start us off. So I think it's there are some lawyers in the U.S. Who have written on this, and I think that the coins could potentially be tainted. There's a taint risk. They could be linked back to the individual or entity that was violating sanctions. It's possible that your identity and your digital wallet address could be added to the SDN list that's maintained by OFAC, and that's a real risk, counterparty risk. And if the government utilizes the latest and greatest blockchain analytic technology, I think there's a big risk of that, of counterparty risk.
What are your thoughts?
Yeah, the point is that if you are aware, it doesn't even matter what your awareness is. If the asset is that of a sanctioned person, dealing in those funds would put you offside of the relevant sanction violation. So quite simply, that it's strict liability, and if you did become aware, then you would be obligated to block that asset and report that asset. So let's look at that on both sides of the border. The frequently asked questions from OFAC says that any of these cryptocurrencies should be treated just as any other asset. So it has to be blocked immediately. And they say with crypto that means that you have to either leave it in place out of the reach of that designated person, or as long as it creates an audit trail, you can put that crypto into a segregated wallet specifically for the purpose of blocking the funds. And then within 10 days of receiving it, or rather within 10 days of becoming aware of the funds, reporting them to the Office of Foreign Asset Control. You might follow if you were a Canadian and this happened to you, and it were somebody designated in the U.S. that isn't designated in Canada. That's high time to call a lawyer. It's a sticky wicket from that point, because in the case of, let me give you a really fun, complex scenario. There's actually around the world a huge conflict of laws around sanctions. So it's illegal in Canada for a financial institution to enforce the U.S. sanctions. So you're not permitted. But if you don't follow the Cuban sanctions as a Canadian bank with presence in the U.S. who deals in U.S. dollars, you'd likely find your way out of the financial system real quick. So in any event, if it is a Canadian sanctioned person, there's similar processes. If that is to say that if the person you received the funds from is a Canadian listed person, you must also block, so freeze in our case. And there's a whole Byzantine set of rules around who you report to. Sometimes it's your financial regulator, sometimes it's the RCMP, sometimes it's CSIS, sometimes it's some combination of the three. But generally you have to report as well. The awful question, the awful implication of your question is, how do you know, right? As an individual user, this becomes a really precarious thing, right? I mean, it's hard to imagine that somebody is sitting there thinking that, without any other indicia, that an individual should be considering the sanctions association of every single one of their wallets. Hard to get there, but the example from today in the settlement starts to peel that back a little bit. And in that instance, this company was set up with merchants to allow merchants to accept crypto in payments for goods. And one of the deficiencies that OFAC found was that this crypto company wasn't screening the merchants' buyers' names and the merchants' buyers' addresses and the merchants' buyers' IP addresses, although it had them. So you start to think about how far does your analysis have to go? How deep do you have to dig? And so that is the implication of your question, which is there's a greater expectation that you're peeling back the onion to find what's in the middle.
I think that's a great explanation, Matt. Good job on that one. That was very complicated. I would have summed it down to 2 words. Don't do that.
Don't do that.
Well, that's fantastic.
That is really confusing. So it's illegal to enforce this, but if you're dealing in the States, you have no choice but to comply with this. And it's like that's such a gray area of trying to
that's
toe that.
Well, most of the EU has rules that prohibit the application of U.S. sanction. This is we shouldn't make any mistake here. The point is that wars are fought on economic battlefields principally now, right? And drones are expensive, and pushing the button has terrible implications. But the using economic sanctions is the way that these wars are being fought, and there's good and bad about that too.
I think we're going to see more enforcement as far as sanctions go with cryptocurrency. As cryptocurrency gains popularity, the price of Bitcoin the way it is, and institutions getting involved, I would expect to see more prosecutions and more settlement agreements like the one we saw released today. Are we allowed to say the name of the company, or I don't think?
I don't think there's anybody.
No, BitGo.
I don't think. Yeah,
it's national news. So
BitGo, but yeah.
Matt, to your point about the more institutional investor coming along and the ETFs that are now been okayed in Canada, I think you're absolutely right. We're going to see more prosecutions because these large investors, hopefully they're doing their due diligence before they're accepting investment funds from people around the world. This would be a great place. Those would be a great place to actually get some investment in and get your funds back, essentially laundering money. And hopefully you could sneak it under the fence. If you're a sanctioned person, like, I'm gonna try to sneak this into one of these ETFs and see if maybe I can, make some money here and get my money back clean, or whatever the case may be. I'm hoping, I'm praying that these companies are diving into crypto or are doing the right things, that they're actually looking.
That you raised a very good point, Robin, and that investment activity is something that I think OFAC looks at, and the Canadian government would look at. And the fact is, I mean, if you're selling a token, like I know, in addition to breaching securities laws, a lot of the ICO issuers could have, unknowingly facilitated, breaches of sanctions because they're accepting funds, from people who may be on the sanctions list. And yeah, it's a big risk for sure.
When I was looking, what was it, 2017, I was interested in the space prior to this, but I started watching all these tokens pop up, and when I was looking at some of the ICOs, just I was kind of curious. I was like reading their white papers or whatever it was. And it's like you could invest as a Canadian into a company that was out of anywhere in the world. Like there was, I think one of the big scams that came out was USI Tech. They're like a cloud mining one. And it's like you put money in from absolutely anywhere. And eventually the Canadian and US government were like, no, you can no longer transact in these jurisdictions. Like you're accepting money from Canadians, like you're getting into like, you know, that market could be in.
Yeah,
and
for sure.
Shut them down, which was good. But people lost millions and millions of dollars prior to this. And there's still so many of these tokens that are out there. And it's like they're starting off in places like Singapore or Malta or South Korea or all over the place. And it's like, how do you regulate something like that to be like, you know, you can't sell to Canadians. You haven't done any of these proper, you know, procedures that you're supposed to, but it like completely bypasses all of that.
Well, it's like enforcement is law. Where what jurisdiction actually enforces the rules, that's where I think there's going to be more compliance. And so I think now that's the U.S. is you know, and maybe Canada. But no, you're right. I mean, we look at DeFi, decentralized finance, and the DeFi platforms that have sprung up in the last year, and it's the same issue. Where like what the nature, like who are, and I you know, who are you getting funds from? Who is funding these projects and you know, providing their tokens for liquidity. I think that I would hope that most of these, you know, DeFi platforms have an AML counter-terrorist policy, and you would think that you know, sanctions compliance would be a part of that policy in somewhere.
Right. I love how much of an optimist you are, I tell you.
I think in reality, it's just the opposite of that they don't have anything in place. The whole decentralized DeFi markets are, you know, the case of smart contracts running essentially swaps between people, or, you know, loans being taken out. And there's a lot of people jumping into space. I mean, that market is growing. I think it's close to $1 billion now, if not more. And of course, you look at the Bitcoin, not Bitcoin, but the crypto market is, you know, well over 1.5 trillion. That's the space is growing so rapidly. And again, we get back to regulation versus technology, and, you know, where we're going from here. It seems like Pandora's box got flung open, and how to put it all back in is it didn't come with the instructions. So
yeah,
we'll see.
The regulators are playing catch up. Really.
Yeah, absolutely. They're so far behind. You know, it could be years. Kind of like the ICO craze that Kayla brought up. You know, 2016, 2017, really 2018, ICOs popping up everywhere. You know, 2019, 2020, you start seeing the prosecutions happen.
Yeah.
The SEC going after people. I think you're going to see the same thing in 2023. DeFi markets, who are there's a human back there somewhere behind the actual launching, that they're going to find.
And they're not all registered as securities dealers either. The DeFi platform, in fact, they're not. So yeah, it's like, guys, it's going to come, and there is someone behind it. It's like, you know, you call it decentralized, but my experience is there's typically someone behind it guiding the process and putting everything together.
Somebody paid for the server and the electricity to keep the bill on, right? To keep there's a human behind that somewhere that may find themselves kind of in a hot seat.
Yeah, I might have an unpopular opinion on this, but to me, like, Ethereum is like the grandfather of all those crypto scams that came out. Somehow it got listed as like not security. And it's just like, it's ethically a security. It's run by the Ethereum Foundation. It's been pretty much proven that Vitalik has control over this. And he just keeps allowing people to issue out these illegal security tokens on the platform. And it's just like, there's no persecution against it. And it shocks me that still happens. And it's right here in Canada. And there hasn't been any lawsuits against Vitalik at this point, and it's like they're going after Ripple. It's like, okay, well,
it's like it's like a risk kind of based approach. Maybe I don't know. You know, maybe it's not. They don't view that as, I don't know, right? It's hard to say, but
yeah,
I think at some point it gets so big that they just look at it and say, "There's no way we're shutting that down." Better to embrace it and regulate it. And this is my opinion only for everyone watching it. You know, sometimes it's shutting it down. It's not going to work at this point. So what do? We embrace it and try to regulate it. See what happens.
It just becomes too expensive to try to shut it down. And the risk, like, the cost as compared to the risk right now is maybe just made it not worth it to prosecute.
But another thought that occurred to me while we're talking is, the press have seen lately around Iran and the extent to which they've been running mining operations. Is there a way to know the jurisdiction in which a coin is minted or mined?
The mining pool. Now, again, we get back to actual location. I'm not absolutely certain on that. Matt, I'll get back to you on that. That's a good question.
I don't know the answer to that right now off the top of my head, but something to do with the mining. Yeah.
I've looked into mining, unless you're going after like a company specifically, like you have like Bitfury or like Hunt 8 or any of the large companies that are actively known for mining, you can figure their location, but individual miners in their home,
I don't think so.
It's just not going to be a way that they can actually trace and track that, because like all you're doing is pointing your miner towards a particular source of energy, and then you're
sure
receive in Bitcoin. So they're not capturing any of that information. And like, I think you have like Nice Miner and a few others that you can mine with, or you can literally just mine in the privacy of your own home. And the only way they're going to figure that out is, okay, your heating bill is like clearly gone up. It's either weed or Bitcoin. Pick one.
Yeah, yeah, exactly. Either one or the. Yeah, I know both in Canada. Or Winnipeg. Yeah.
Yeah. I was actually mining in my basement at one point, and like I was just running a ton of miners, and the cops showed up because they were just like, "Your electricity bill's been really high." It's just like, it's not marijuana. Like
I promise. Can you throw me that bag of Doritos?
Right.
But that's one of the things that it's like, it's pseudo anonymous, and in some countries, the cops have come banging on the doors of miners and have confiscated mining equipment. Like I think in Venezuela, or I met a fellow through one of the Canadian Blockchain Consortium conferences, and he had actually had the police come in and kick his door down, and that's just for mining Bitcoin. So crazy. I don't know where I was going with that, but
it was a fun story.
Yeah, there you go.
Awesome.
That's fun. All right. So my last question would be, what can Canadians do to protect themselves here, and what are some of the best practices for sanctions compliance?
Well, I think right off the bat, the best practice is, if you're dabbling in crypto and if you're a private person, there's not much risk to you. But if you're a VASP or some other type of institution dabbling in crypto, or if that's your business model altogether, is to have a good compliance tool available to you, and sanction screening included in it. I think that's probably the best thing. It's not something new to financial institutions. It shouldn't be anything new to crypto institutions. The tools are available. Pick one, use it, and stick with the regime.
I got to add one layer on top of that and just say, from a risk-sensitive, look at this from a risk-sensitive basis. What are your vulnerabilities? And your biggest vulnerability, in my view, if you're a crypto company, is a ransom payment. If you are going to process a ransom payment, because they'll tell you, right? Somebody that comes to you and is buying all of a sudden $100,000 worth of Bitcoin in a hurry and not worried about the price. This is a ransomware. They might tell you, they might not, but there are lots of indicators. And if it is a ransomware payment, be very careful. There's actually a wonderful guidance document that FinCEN and OFAC put out to tell you what to do in case you have to make a ransomware payment, in terms of the indicators to look for and what screening they expect. Follow those steps, and it may be that they actually have a hotline that you may have to call to say, you know what, this is the ransomware payment that I'm looking to pay. Can we? Because if you don't go down that road, if you don't take those steps, then you could be dealing with the double problem of not just paying the ransom, but also having the Office of Foreign Asset Control breathing down your throat.
Yeah,
can you send me that, Matt? Can you send me that? Offline. Just I guess knowing, make sure your staff know what the red flags are. Make sure you've got an investigative strategy in place, because when risks are identified, there should be a strategy on how to report port them and freeze the assets and deal with the matter, and then just, you know, managing your risk exposure, like what's being said. Yeah.
Oh, goodness. So we did have one question from the audience, and it was around, I think we want a little further explanation on what actually is the travel rule. I know we talked on it a little bit, but for the audience that might not have been aware of what it actually was, we get a little explanation.
Well, just go. Is Rob muted? No.
Yeah, I was muted. Pardon me, guys.
It just generally, and when you're sending digital currency from one place to another, along with the transmission of funds, there's a requirement to provide certain information on the identity of the sender, right? And the recipient, is that right, gentlemen?
Well, the travel rule goes in line with the travel rule that's in place now for fiat currencies, which is in the US, if you're sending a transaction of $3,000 or more, you have to send ownership information with it from institution to institution. And they want, it's not implemented today, but FATF has recommended that every FATF country adopt the travel rule for cryptocurrency. So any transaction over $3,000, regardless of the currency, would have to within require the exchange of information for the KYC information. Matt, did I miss anything on that, Mr. McGuire?
No, good one.
Okay, perfect.
Yes, though the travel rule is it's FATF, so it's not like different countries have different interpretations on how to enforce the travel, or how to put in place the travel rule. So it's not something coming out of legislation. It's more a guidance from FATF. But that if people fail to, if countries fail to implement some variation of the travel rule, there can be consequences on that country.
Right. Essentially what happens is FATF scores every country on an anti-money laundering kind of score sheet, and they assign risk associated with each country. So you obviously want to be in the higher portions of that list that you scored well against the FATF recommendations. And what I noticed very clearly with the last FATF recommendations on virtual currency providers is that their release of recommendations kind of coincided with the G7 meeting. And the G7 meeting, when they spoke, they talked about cryptocurrency. And then we had the FATF recommendation for the travel rule. And then we had, right after that, the US come out and say, FinCEN released an announcement opportunity for questions and comments on the travel rule. And we also saw that from the EU as well. So the G7, backed up by recommendations of FATF, they're really pushing the travel rule for cryptocurrency.
Yeah, and it flies in the face of that movement in crypto that doesn't want to disclose their information, that think that people have an inherent right to privacy, and that if I'm sending digital currency from my exchange to somewhere else, I shouldn't have to that receiving VASP shouldn't have my identity. But I just want to note though that, like, in general, I think, this isn't about the travel rule, or this webinar is not about the travel rule, but most VASP will take your information anyway as it is. So I think most VASP are collecting KYC information, and so I don't know how difficult it is going to be to migrate to complying with the travel rule as it stands now.
Right, and your typical user won't affect your typical user at all, since most people already sign up for an exchange and use cryptocurrency through an exchange, or the vast majority. There are those privacy-focused people that don't want that to be the case, so they will continue to host their own wallets and change addresses on every use. There's things that people do to make sure they're totally anonymous, and there's other people like me who I don't really care. It works for me. I love crypto and I invest here and there, and it doesn't bother me a bit. So whatever.
Yeah, I'm more of a buy and holder, so I'm not too worried about sending
me too.
weird place and ending up with sanctions. Pray to God not, but no, it's definitely such an interesting space. And all right, so we're up on time. I want to thank you guys so much. I've definitely learned a lot. I really appreciate every single one of you giving your insight, and I'm pretty sure our audience has as well. I think they've been kind of glued to their seats listening to all this incredible information has been flowing to them. So thank you guys so much. I hope you all have an amazing day, and thank you for joining our webinar.
Thank you, Kayla. Thank you everyone for watching.
Thank you all.
Have a
Thanks,
great day.
Kalea. Yeah, great.